Hey everyone, I just wanted to hop on. This is I'm recording this on Wednesday, but I wanted to go back and talk about yesterday's price action for Tuesday on the SP500. I did actually execute a trade on that day and had marked up a couple of other ones just on TradingView that I didn't actually execute on, but I did catch one sell yesterday. So I kind of just wanted to do a recap of kind of how I saw yesterday play out, how I executed on it, and what I was watching, and kind of my logic behind it. So yeah, with that being said, let's go ahead and jump in. So right now we're looking at the 1 hour time frame. I put it in replay mode just to kind of back up to hide today's price action. Um, so this is, I backed it up to the end of trading yesterday. So essentially you can see yesterday morning, we, you can see yesterday morning we kind of opened, price rallied overnight up into this blue dotted line here, which I was watching for these equal highs. So price had been bullish. We ran into that buy side liquidity. So, and then it started selling off. So at 8:30 here at the start of this green shaded area, my initial bias was bearish, is kind of what I was looking for. And I had been eyeing this daily fair value gap down here as I'm expecting price to return into that. And then, as you can see, I obviously made note of the Fed was speaking yesterday at 2 o'clock, so I expected a volatile afternoon session. So let's go ahead and drop down into the 15-minute time frame, and you can see a bit more here. So when I got on, so you can see the midnight open here in New York, price just rallied away from it. This line here is the 9:30 New York session open. This was that blue 1 hour time or relative equal highs that you see price ran through, kind of came down afterwards, sold through this swing low here, and then so this is 8:30 when we came in. Is that we started retracing up, and then as you can see, there was a sell off here. This was the 8:30 opening price. We went into a premium from that, so I was, again, it was all kind of confirming bearish for me. So I'm going to drop down into the 1 minute time frame so you can see the trades that I had put on. So again, 8:30 a.m. is the start here. You can see I had marked up these fair value gaps down in here. Actually, let me try the 5 minute. Maybe that'll be a bit cleaner to start with. Yeah, so you can see we ran into these relative equal highs. Price started to sell off, left behind some fair value gaps, kind of did another one here, left behind another fair value gap. And then, so initially I was watching this one here because I saw price had went up, took out this swing high, declined down, took out this swing low, and I was kind of like, okay, I was watching this one, which was on the 1 minute. So as you can see, I kind of put in a paper trade here. I didn't actually execute on that one. So price had went down prior to 9:30. It ran back up into it. Went into profit for a little bit. I was kind of watching. Actually, now I'm going to drop back down to the 1 minute. So you can see here a lot more clearly, right? Like it kind of came up, ran right into that area, which again, I should have, this was kind of giving me a weird feeling in my gut seeing these equal highs right there, which is why I didn't set this as an actual execution, but I wanted to mark it up on TradingView just, to practice. So it had sold off, leaving behind the fair value gap. Price stabbed up into it right at like 8:30, sold off again, kind of meandered around, left behind this little fair value gap here that I was kind of watching like, okay, if we break that, then we should be good to go lower. So you can see right at 8:46, price ran back up into this fair value gap, stabbed pretty high through it, and I was like, obviously my stop kind of accounted for these equal highs. And then price sold off, kind of stabbed down through this, so I was, actively watching this, and then as you can see, price rallied and stopped that position out. But this up here, this is the position I did actually execute on. So I was watching this fair value gap and this fair value gap, and I was mostly watching this one because when it rallied here, it took out this buy side liquidity, and then it was the start of this move that took out this swing low. So I viewed this one as a good one here, and I was like, if I'm bearish and it takes this one out and goes up to this one should make it up on the back end if I get stopped. But so I did actually execute on this one here. And as you can see, it kind of stabbed into it, came down, played around with it a little bit, offered multiple, 1, 2, 3, 4, 5, multiple entry attempts on that. I had this marked up again as a take profit of down to that daily fair value gap. The stop loss was above this swing high, and again, I was leery relative equal highs, so I was worried that there was a potential it could come up to this one. But as you can see, it sold off rather aggressively. I took some partials along the way, and ended up, I didn't hold this position all the way down to here. I think I got out somewhere over here around like 10:30. I made 3% in total off of that. My broker, with the account size I'm running on that, the commission per lots is really high. So I actually need to start looking for a different broker to kind of do this on. Because as soon as I executed the trade, I was 3% in the hole, just off commission. So, not ideal, but analysis played out. It came down to, these were 15, 5, and 1 minute fair value gaps on the buy side of the market. As you can see, you could have taken some short-term buys in here, and then down around 10:45, it actually landed in here, and this was the lowest point that move got. Now this buy here, again, because these were areas that I had marked up prior to 8:30. I was watching these for potential reversals on the buy side. Again, I expected price to go down to that daily fair value gap, but I was mindful of these buy side areas because maybe price would want to go back up and take more sell side liquidity before making a move on the daily. So I was watching these, and sure enough, price came down here, and you could have gotten in on these fair value gaps down here. And this buy took off. This was another, so this one I had it marked up going up to this other fair value gap I was watching. So about a 15.3 to 1 trade, barely any drawdown on it. Price just skyrocketed off, kind of consolidated and went over the lunch and kind of dropped back down and ran up again. I think ICT had actually kind of covered this afternoon push to kind of take out that final bit of liquidity. So there was a buy there, and then the other fair value gap I was watching from the morning actually got hit right after the lunch hour, as price was kind of reloading to go long again to make the final push. That actually, this is the push that ICT covered, is from down here up to here, with the Fed volatility. But prior to that, you can see price was manipulated, ran right back up into that fair value gap and dropped. And again, I had put the take profit down at that daily fair value gap, but this ran for another 10% before it reversed for the buy that ICT was talking about. So it just kind of shows that, while the underlying narrative for the day was bullish, there was 20% in sells available just off the two I had marked, and then another 15 in the buy, and then I think this could have been another 10 to 15% here depending on entry for this buy that ICT outlined. I hadn't marked this one up, I didn't catch it. The afternoons are kind of hectic for me, personally, running around picking kids up and things like that, so the afternoon sessions usually aren't good for me to trade. I was watching this area and had hoped to actually execute on this, but as you can see, my entry here was 4083.2 was the area I was looking for, and the high of this candle was 4083.0. And I even double checked on my broker's price feed, and it would have missed by half a point. So even if I had set this limit, if I hadn't adjusted for the spread, or moved my limit down like a little bit, it wouldn't have triggered anyways. But another 10% was available there. ICT outlined a perfect buy here that ran probably for another 10% or so, like I said, again depending on your entry. And then once price hit its objective closer to 4 o'clock, it just, all the volatility died out. So yesterday there was lots of profit in the market yesterday, with it being a volatile day. We had the 8:30 news, we had the 2 o'clock Fed news. Lots of opportunity yesterday, lots of potential for profit. The market presented, or the model ICT teaches, I think presented itself multiple times, both on the buy and the sell side yesterday. And I was able to walk away securing 3% on the day. It's never a bad thing on a day that you were able to pay yourself and minimize losses and beat the brokers on commission and spread and things like that. So I assume a lot of people were watching these setups, but as always in the comments, I'd love to hear if you were looking at any of these setups, if you executed anything on the SP500 yesterday, or whatever other setups you were looking at. If you're a former or current student of ICT, love to hear your experiences about your journey with his concepts. Any feedback or anything you have on what I outlined here, any questions, I'll do my best to answer them. So that's all I got for today. Like I said, it was just a recap of yesterday's trading, since I didn't get a chance to put the video together yesterday. So until I talk to you next, good luck and happy trading.